Hey guys, Justin with the Moody Olson team. We're here again with Linda Vo with Security National Mortgage. Today we want to talk a little bit more about what type of home loans there are out there. Mike and I hear all the time that we just don't understand. You know, everybody thinks it's just VA, conventional, FHA. They don't understand the terms. They don't really understand what the qualifications are. So it just becomes very confusing. And then, you know, the biggest fear everybody has right now is interest rates. Obviously we can't control the interest rate, but we can at least help educate you on what types of loans are out there. So we'll talk to Linda about those, and then we're going to bring in Steve, Linda's boss.
Yep.
Steve Schaure with Security National Mortgage, and he's really going to go in depth into those loans and what might be the best fit for you. And then we'll also talk to you about why it's so important that you talk to a lender. So Linda, let's jump right into it then. Let's talk about the different loans that are out there. What are the most popular loans right now?
So the most popular, because they tend to have the least risk because they're backed by the government. You're thinking FHA, VA, conventional, USDA, although that's not very common out here in Vegas because
yeah, because when I think USDA, I think about my steak.
Yeah.
So, and we'll talk about the USDA. So those are the four popular ones?
Yeah.
Okay, great.
Yep.
So what is a conventional loan?
So a conventional loan is going to be a Fannie Freddie Mac loan. Those names don't really mean anything to our listeners, but those are the entities that are backed by the federal government.
Okay.
They're not government loans, they're just only backed by them. So they're gonna typically be the best for people with higher credit scores, but not always. For example, I have a client right now who is doing a conventional loan on a 635 credit score.
Okay.
But because they're putting 50% down, that loan makes the most sense for them.
Okay.
Okay. Typically, you wouldn't be a first-time home buyer, although, and this is what I also want to highlight on a lot of these loans, is that just because it has that name, conventional, FHA, VA, most people don't understand that there are actually a lot of programs underneath those categories.
Okay.
So, for example, conventional loans have a first-time homebuyer program. Even though I just said it's not typically for the first-time homebuyer.
Okay.
But for the right borrower, good credit score, low debt ratio, that's the true first-time homebuyer where they can go 3% down on a loan.
Okay.
Okay.
Right.
FHA is a Federal Housing Administration. That is a true government loan, right? It's not backed by the government, it is a government loan. They have multiple programs underneath that, upwards of 20 plus. You have down payment assistance under FHA loans. You have renovation loans under that FHA. So to truly understand what loan is best for you, because that is not your job out there. That is our job as the lender to take your position, and this is what we call establishing the financial position. That's what we do during the first consultation. Okay. Who is Justin Moody? What is his financial position? We look at your income, your assets, your credit. Then that is our job to understand what these programs require and how we can tailor that to you specifically.
Okay.
It is important to understand these programs, but not so much that you have to know every single detail.
Okay.
Because that's my job.
That's great. Perfect. Okay. Now, we talked about conventional a little bit. We talked about FHA and some of the different subcategories that there can be, and we'll get more in depth on those. And the best way to get in depth on those is to actually reach out and talk to Linda. But let's also talk about, because it's important to Mike and I, Mike being a veteran, we've dealt with a lot of veterans. We still work with a lot of veterans. Let's talk about the VA loan.
VA loans are hands down my favorite type loans.
Okay.
Only a veteran, whether you're active duty, a veteran who has left service, and certain reserves, National Guard. I believe in order to qualify for that, if you're in those reserve categories, is to find out whether you do qualify for it, because it has to do with whether or not you've had enough training points, I believe. Mike can confirm that for me on what exactly it's called, but you have to have gone to enough training and been in the reserves for long enough to qualify for those VA loans. If you've never served or haven't served in the military, you wouldn't qualify for a VA loan. The loan itself is 100% financing. So I get asked the question, can I get down payment assistance program for VA loans? Well, you don't need a down payment assistance program for a VA loan. You can get it 100% finance, which means you don't have to put a down payment down. They're going to have the lowest interest rates, and they're going to be the most forgiving on credit, debt ratio. They really want to take care of our veterans to help them buy homes with these loans.
Okay, so those are really the three top, most popular loans out there right now.
Yeah.
Okay, what other programs out there might somebody be looking to get into? Who's the experienced buyer, or they're looking to relocate? Is there anything else out there that might be attractive to somebody like that?
Absolutely, absolutely. Because the thing with these government-backed loans, right, conventional FHA, VA, they have guidelines. They have what they want for them to back these loans. So you have to fall into this little box. They want X, Y, Z. And so that's why we call them government-backed loans, because they are very specific criteria for these loans. Then you have investor-type loans, meaning that it's still a bank, it's not an individual person, but for example, I'm going to use the example of a bank statement loan. This is going to be specific for people who don't fall into that guideline, that box of criteria to qualify for a loan. Bank statement loans are specifically designed for people who are self-employed.
So like myself.
Correct.
I would use a bank statement loan.
Right, because you are self-employed, and so the name of the game is to limit your tax liability to Uncle Sam. You don't want to give everything back, especially self-employed, because now you can start writing things off. So you made what you made, but there are also business expenses associated with you running your business. So when you back that out on your taxes, how much you actually made on your tax returns are what we qualify for the loan. Well, let's say you wrote off a lot. Well, now you don't qualify because you may have made $100,000 for the year, but you wrote off $90,000 of it.
I'd have to have a really good attorney or accountant for that, for sure.
That is for your CPA, but hypothetically, then we have to take that, what you paid the taxes on, to qualify. So now you don't qualify for the FHA conventional because in my scenario, 10,000 divided by 12, you're not making very much per month. And we're gonna look at that to qualify you. So a bank statement loan is an alternative way of calculating that income. Instead of using your tax returns, because FHA conventional or VA requires that we do, we are now taking 12 or 24 months of your bank statements, of your business bank statements, and we see those regular deposits coming in. We add them all up, and then we take an average. Now that's a different way of calculating your income.
Okay. Now let me ask you this. Mike and myself, we both keep two accounts. So would we have to bring in both accounts, or can you only go off of one account?
I would highly recommend basically showing me everything so that I can take a look at what would work out the best.
So having two bank accounts and making deposits into both is perfectly acceptable.
Yeah, and it's not the end all be all. Yeah, you can certainly do that. So that's an example of an investor type loan.
And then you bring up a good point, an investor loan. Mike and I work with a lot of veterans. We also work with a lot of investors. Sometimes investors just don't have the cash to put down on an investment property here. Is there a loan built for them?
Absolutely. So that goes into the investor type loan again. So we also have DSCR loans. Those are debt service coverage ratio loans. And those don't use your personal income at all to qualify. And so these debt service coverage ratio loans don't use your personal income. What they use is the rent flow of the property. So now as an investor, you want to buy this home to rent it out. If the mortgage payment, including the HOA, so the principal, interest, taxes, and insurance and association dues. So in acronyms, PITIA, principal, interest, taxes, insurance, and association dues. You can do a 1-to-1 ratio, 1 and a quarter to 1 ratio, meaning that whatever that mortgage payment is, as long as you can get that rent flow for it, you can now qualify for the loan.
So on average, the 2-bedroom condo here in Las Vegas rents for about $1,600 a month. So if we got a mortgage at $1,700 a month, and that rent was under that mortgage payment, well, would they still be able to get that loan, or do they have to raise the rent in that unit? How does that work?
They would have to raise the rent on that unit.
So the rent is going to have to match the mortgage payment.
Yep, at least at a minimum.
And then, of course, if you have a good realtor like Mike or myself, we'll help you find properties that are going to be renting for higher than your mortgage.
Right.
What does the down payment look like on one of those loans?
So they can be anywhere from a minimum of 20% and upwards.
Okay.
The reason why I say upwards is that perfect example that you used. If it rents for $1,600, but the mortgage payment is $1,700, well, how do we fix that? It's not dead in the water deal.
Okay.
We increase that down payment so that we can lower that monthly payment.
Okay, great.
So it's a minimum of 20, but could be upwards. And people have to understand a minimum is just a minimum. Doesn't mean that that's what your down payment is going to be.
Okay.
It's what that scenario is going to dictate and allow.
So with these investment loans, what kind of credit score are you looking at?
Minimum 500.
500?
500 credit score. So
How can that be? Because I know other lenders and they're going to tell me 650, 700.
Yep.
So how is it that you can do 500?
at a 500 credit score, you want to think of a loan that it sits on a tripod, right? It has three legs. We look at the income, assets, credit of it. So if you're at a 500 credit score, the likelihood that your down payment is going to be 20% is slim. They're probably going to want a higher down payment because they want to know that you have more skin in the game. But that's how they can do it, is
So a 500 credit score equals a higher down payment.
potentially, yeah.
But still, you can get qualified at a 500
Absolutely.
credit score. Okay.
Yeah.
All right, great.
And that's why it doesn't hurt. We get a lot of people, well, I don't think I can qualify. Is it because you don't think so? Is it because you read something on the internet? Or did you actually talk to a lender and they told you no? Did you talk to multiple lenders and did they tell you no? Because everybody's scenario is incredibly unique.
Okay.
And so it is worth it to talk to a lender to help you understand where you're at right now, what your goals are, and what we as lenders can do to get you there.
Okay. I have one last question for you, and then I want to bring Steve in and we can jump into a little bit deeper into some of these loans. Mike and I do a lot of showings, and we show a lot of homes in town. And we hear all the time from buyers, oh, it needs a lot of work. I don't have the cash to do that. I don't want to deal with that. Is there a loan program out there that would help them with that?
Absolutely. So this is where I shine, right? Because you can go to a bank and they can tell you, oh, we have the FHA conventional VA loans. But when we discussed earlier with the type of loans under these programs, conventional FHA and VA have renovation loans.
Okay.
So what they do is they qualify you to purchase the home. Then you would also still have to qualify for the payment and the extra funds, but they will also give you an allotment for the repairs.
Okay.
And the value of that home is now appraised at the anticipated value after completion.
All right. Now, do they get that money to do the repairs themselves, or does that go in some sort of account where it's drawn out by the contractors? How does that work?
It is drawn out by the contractor, yep. So that way we can ensure that the contractor who is making these repairs are, one, insured. It's not some janky job that, you know,
Gotcha.
John's cousin
did. I totally get that.
wiring the fans to cause a hazard. But it will get paid out to the contractor, and the contractor themselves will have to sign off that they were paid appropriately and no liens are put on the home.
Perfect.
Yeah.
All right. Well, Linda, thank you for kind of going over, some of the more popular home loans, and then some of those home loans that I didn't really know about or I didn't understand, and maybe some of our viewers didn't as well. We're going to bring in Steve, your boss, and we're going to get more in depth into some of those loans and who might be the best fit for them and really how they work for them.
Perfect.
So thank you, Linda, for your time today. I
you.
really appreciate it. All right, so now I'm sitting with Steve Schaure, branch manager for Security National Mortgage, correct?
Correct.
Steve, real quick, we've done videos with Steve in the past. You guys, if you follow our channel, you've seen Steve before. Steve, just to remind everybody, how long have you been in the industry?
32 years now.
Okay.
A long
And
time.
is that specifically in Vegas?
31 years in Vegas,
Okay.
another year prior to that in Michigan.
In Michigan. Okay.
Where I started.
So you know the Vegas market.
I know the Vegas market.
Okay. And you have some experience in dealing with the different types of home loans.
Yes.
Okay. So we were just sitting here with Linda, and she talked about FHA and VA and conventional, and a little bit about the USDA and all the kind of subcategories. I want to tap into your experience, your 32 years, and really get more in depth on these loans and who's the best fit. What loan might be the best fit for individuals? Can you share a little bit of your
We always
knowledge?
look at that. I teach classes about this all the time, and you have to. In my mind, when someone calls me and says, "I'm looking to purchase a house," I go right into categorizing the loan.
Okay.
Which way are they going? Are they buying an investment property? Are they buying it as a vacation home, or are they buying it as an owner-occupied? If it's owner-occupied, I'm asking what price range they're looking for. That sets me into a category as well.
Okay.
Obviously, I'll start with, are you a veteran of the military?
Yeah.
Then we'll go into a VA loan. So each one can have a little bit of different qualifications of it, and I'm just categorizing it right then and there.
Okay.
Then I figure out that maybe FHA is the best fit for you, or maybe this conventional loan is the best fit.
Okay. So Mike and I, we've been experiencing a lot of clients right now that are relocating.
We see a lot of that.
Yeah, we do see a lot of that
here.
And they're coming to Vegas, they're getting jobs, but maybe they don't have a ton of money in the bank. Or maybe they do. They've sold their properties in California or Oregon or Washington or Hawaii, and they're coming here and they have a fairly large down payment. Would you recommend that somebody puts the biggest down payment they can on a property?
I'm all about payment per month, what people really want to pay per month. And I sometimes don't think they need to do all that. I was just discussing with someone yesterday about same scenario. They made a lot of money on a house in California, buying a house here, but it's a brand new home. And I said, well, you want to save some money for the backyard, for the pool you want to put in, for some things you want to do, furniture. Why put everything into the house and then go get debt for your furniture or your landscaping or your pool?
Okay.
Why would you do that?
So let's break that down into two different portions then. So someone that's moving here, and maybe they don't have a lot of money, but they have good credit, they have a good job. Where would you put them? The average home price now in Vegas is selling for $425,000. Where would you recommend they go?
I would most likely recommend an FHA loan with 3.5. There's conventional 3% down, and there's FHA at 3.5% down. So you can get in, and there's some first-time home buyer programs out there that are excellent. And as well, some down payment assistant loans that are good to help with that down payment as well, where you don't have to be a first-time home buyer.
Yeah. Now let's talk about that real quick. What are the qualifications for a first-time home buyer? A lot of people kind of get that confused.
They do. They think I've owned houses before. The legal criteria for first-time home buyer is someone who has not owned a home in the last 3 years.
Okay.
3 years, that's it. Now, the downside of that is if you're on mom and dad's home as just because you're on title, then unfortunately you're a homeowner. That's the one downside of that. We get that all the time on that part. But if you have not owned a home in the last 3 years, you're a first-time home buyer, which will allow you on a conventional loan, conventional only, to put as little as 3% down payment.
Okay. Now, talk to me about down payment assistance, and and I know, maybe even go back to the first-time home buyers a little bit. Are there classes that you have to take or certifications you have to get? Can we talk about?
Some do. Some DPAs, we like acronyms in the mortgage business.
Gotcha.
DPA, down payment assistant loans. Some down payment assistants will require you to take a home buyer class.
Okay.
Homeowner certification. Great news, they're all online nowadays. You go on it really quick and take this class about how to manage your finances, how to do certain things, and how you qualify for that.
Okay.
But the great news about DPA programs is they don't always have to be first-time home buyers. Some do not have income restrictions, so some you can purchase in areas and make very good money on that.
Okay.
And some have great restrictions and give more money towards as well.
Okay.
So we have a lot of different DPA programs to help a person get in.
So what would you say the average down payment assistance program helps the buyer with? Is like the minimum?
Yeah, the minimum. You're typically not getting 20% down to go purchase. You're getting a 3% or a 5% down payment to help with you the down payment and possibly closing costs.
So now, does that person still have to have money in the bank then? Or can they, hey, I make good money, I have good credit, I meet all those qualifications. I'm getting down payment assistance. Do I still need to have 3.5% or 5% in the bank?
No. No, the great news also with that is some do not require reserves.
Okay.
Those are called reserves.
Yeah.
So money left over after everything's taken out.
Okay.
Great news with that though is we could use a lot of retirement accounts for reserves. We could use their 401k, their IRA, things that they're not going to touch.
Okay.
And we don't make them touch it, or we don't put it into any accounts of ours or anything. We just use it as reserves. One thing we have to think about a mortgage, everybody gets this confused on a mortgage. We qualify a mortgage for now. We qualify up to the day they purchase.
Okay.
We don't really qualify after the loan is done.
Okay.
So it's not like we say, well, you still have to keep this money into this account for 30 years.
So basically,
after-
once that loan is funded, they've moved into their home.
Go buy a Ferrari if you want to. We don't suggest it, but that's my thing. I always tell you, hey, don't buy a car now. You could buy something after. That goes into the qualifications, right?
And your realtor should be telling you that as well.
Yes.
When you're in contract with the home and you are financing, don't buy anything. Don't make crazy payments into your bank accounts. Don't make crazy withdrawals from your bank accounts. Clear everything with your lender before you do anything when it comes to your account, right?
That's the biggest thing we always see.
Yeah.
People doing things, oh, I paid off that credit card. Well, how did you pay it off? I got money from mom and dad. We have to show everything. There is the unfortunate scenario, there's no realistic thinking in mortgages.
Yeah, I gotcha.
One of the downsides. Realistically, it sounds great to you and I. Realistically, we think, oh, that just made sense.
How often do you see, and again, we want to educate you guys, we want to bring you good content, and I want to ask this question because I feel like it's happened many times. How often have you been, weeks away from closing, and then all of a sudden, they go out and they buy a ton of furniture for their new home?
Oh, all the time. Or one of the big box stores has, appliances on sale.
Oh, gotcha.
Oh, look, there's a huge sale today. We need to
Yes.
buy these refrigerator and washer dryer. Happens a lot.
Yeah.
And we only check typically one time on your credit. At the end, we don't check your score again, but we check if you have more debt.
Okay.
So that's a scenario that could happen. If a car pops up or something pops up, yes, that could happen. What we're trying to do in a mortgage is to start the file and mitigate as much problems that could happen during the process.
Okay.
So we'll start it, don't do this, don't do that. We grab everything we can up front, and then at the end, it's a smooth closing and transaction. Like I say, after the closing, go purchase whatever you'd like.
Okay. Now, I don't want to take up too much of your time, but I do want to kind of jump into something that Mike and I come across a lot, which is investors. Linda and I talked about some investment loans. Vegas is big on investors. There's a ton of investors coming into Vegas right now. Can you get a little bit more in depth on the types of loans that investors might be looking at, what those qualifications are, and the kind of the pros and cons of those?
The investor loans are great options for people to purchase, minimum 20% down. And one fact real quick, less than 20% down typically on a loan requires the PMI, private mortgage insurance. Investment just doesn't, they don't allow PMI in the investment type of loan, hence the 20% down payment. But there are so many great investments. I know you and Linda discussed the DSCR loan, one of my favorite loans. Here at Security National Mortgage, we have huge backing of an insurance division as well, which helps us do down to the 500 score on a DSCR loan.
That's awesome.
Yes, lower score could mean higher rate, but you're still able to purchase an investment property without major qualifying, without a very good credit score, and now you're buying your great investment property for the future.
And even if they do have that higher rate, because of the way that loan functions, the payment can't be higher than what they're making on the rent anyway.
Correct. It's a 1-to-1 ratio.
So at least you're breaking even and building equity, or you're making a little bit of money on the rent and paying less in the mortgage.
Correct.
So even with that higher interest rate, it's kind of a wash. It's not going to affect them that much.
Correct. Now there are full qualifying investment loans where you can get a better rate.
Okay.
So don't think that every loan has to be the DSCR loan.
Okay.
You can go with a regular investment property, get a standard going interest rate on that, fully qualify for it, and get a good loan.
So, but again, if somebody's got some money in the bank, they're looking to invest it, they're looking to maybe make a little bit more long-term investment, and they're looking at Las Vegas, but their credit just isn't where they're at, you might be the person to call.
It's an excellent option.
Okay, great. I
Yes,
love it.
Great option.
Okay. Steve, thank you so much for going into
pleasure,
some of these
Justin.
loans
Thanks.
with us. I really hope that helped you guys out. Again, Steve and Linda's contact information is going to be in the comments down below. So make sure you reach out to them. It's Steve Schaure and Linda Vo, and they're with Security National
Mortgage.
Steve's been in the business for forever. And again, if you guys have any questions or if you're looking to buy or sell, next week, next month, or next year, reach out to the Moody Olson team. Please like and subscribe, smash the bell icon so that you get notifications when we put out those videos for you. Remember, those videos come out twice a week, and Mike and I are always trying to give you the best content. Thanks for watching, guys. We'll see you on the next one.
Thank you.